Hello, and welcome once again to another episode of The Trade Stylist, where we try to craft your trade. Today is the episode 4 of week of 28th of the January 2024. And first, we start as usual with the disclaimers. Um, all views are personal, and all investments into any trading positions can lead to more losses than your invested capital. Further, numbers and data points that are on the slide, they might be delayed and also may also have typos in them. So please don't use them as your base of your trading decisions. So once again, hello. I am Debijyoti, better known as DJ. I'm here to craft your trade, and you can always find me at the trade stylist. And as I say, may the trading gods be always be with us. And this is our logo, this is our motto, this is also our hope and our prayer. So we start as usual with the market update, looking at how the markets moved over the week. First of all, we start with Robusta, which was up almost 5.1% to close at 32.76, while Arabica also moved up to close at 193.38. Last couple of weeks, Arabica and Robusta have gained pretty high steam, while Cocoa London and Cocoa US seem to have lost a little bit of the weight. In fact, it reversed a couple of days into the closure, but still closed positive overall. Orange juice also went up by 3.2% over last week, while sugar and cotton also went up roughly by 1% and 0.06% to close at 23.83 and 84.41. Sugar has still not claimed the highs of the last 10, 12 trading days, but it seems like it is again building up a little bit of pressure on the upside. Cotton, on the other hand, seems to be increasing in strength, as you can see also from the small graph. And that tells you that typically we do assume that cotton may hit 90 cents going forward. Corn, on the other hand, was a damn squib. It still ended up positive at around 446.25. And finally, wheat had a positive week overall, closing up above 600 to 601.50, which was, I think, a first positive week in a long time. Soybean barely held the 1200 cents position. I think everybody's waiting and watching when it breaks and how badly it breaks below the 1200, or does it sustain there? If it does, it might provide us a trade opportunity. And finally, soybean oil, almost no movement. In fact, it was slightly bearish. It closed at 46.9. And here we closed at 46.88 basis last week. So really very small movement overall. And then soybean meal finally down again at 349, closing 2.1% over last week. Over the year, YTD 2024, grains portfolio is down significantly, corn losing the most basis last year. While in the softs, cotton is slightly negative, but cocoa strongly positive, gaining over 82 and 87.5% over last year, similar times. We do think the soft position keep on staying this strong for the next 2 to 3 months. And sort of the market dynamics and the supply dynamics feel that there are very little chances or very low chances of reversal at this point of time. Grains, on the other hand, might find a support soon. There are issues happening in the Red Sea, which we are all aware of. And then seasonality also typically should play in the favor of grains. So we might see opportunities coming up. Now, this time we are going to do trade speak in a slightly different way. And that's about focusing on the what, the why, and the when. Um, and by that, I mean why and what we are looking at is what is going on in the softs complex and what is going on primarily in the grains complex. The softs complex, as we have seen, has been very strongly positive over the last year, as we saw in the graph a couple of slides back, and I'll take us back to that. We also see that the grains complex has been equally hammered, but not to the same extent. We, however, have to look at the total volume plays in terms of grades and in terms of the soft complex to understand the power of funds at play. The equities market also has a major influence. The hedge funds are not necessarily commodity only hedge funds or the funds who are playing into this. They are usually diversified funds, in which case they would typically look at their exposure in different asset classes. And within their asset classes, they will also look at soft, hard commodities to play in if they are choosing to play commodities only. And within those commodities as well, they'll choose which of those agri commodities seem to be strong in which direction. They can take long or short positions, of course. And these positions can be held for a very long time, depending upon the strength of their purses and also their estimation of future earnings. Traders like me earn their bonuses based on what numbers we show at the end of the year. So typically, we do like to cash out. But yeah, those cashing out positions may or may not be vindicated if you see that there's going to be an even stronger move than where we are sitting on. So we might choose to cash out on a certain size of the position, not in everything. Or in some cases, you might actually add on those positions and still strengthen them going to the next year, actually, maybe increasing the size of your potential gain in the coming year. So looking at that, typically you would see funds flowing in and out of these commodities, and understanding that gives us the reason why a certain commodity does a certain move, typically over longer term. The fundamentals definitely have a play on it, and most of the fund houses do look at the fundamentals to play a strategy. They're very, very big players who can definitely corner a portion of the market and provide a direction to it. But those plays are usually limited. So, in more often cases or not, looking at the fundamentals, looking at the information, looking at the market reports, they would choose which commodity to focus on the short and long term. Majority of the movements and the long and the big movements are made by these longer invested funds. So if we are looking at what has happened, we know that the stock index S&P 500 has been doing pretty well over the last year. It has hit a 2-year high, I think, last week, and it continues to, I think, keep going stronger. So there is definitely involvement in equities of the funds. Other side, in the commodity space, the soft markets are providing that impetus and the reason for the hedge funds to stay long, which means they don't really have a very strong reason for them to move and get out of these long positions. Now, if those positions are in the money, but they don't incrementally add strong value, that's when these funds will start exiting. And if they start exiting, typically what would happen is that the market would start reversing till the time somebody else comes back, or the funds themselves feel that the market has come back to a certain extent, which would again make it lucrative for them to again take the same kind of position if the overall fundamentals or the view on the market hasn't changed. And that's something is we need to look at is mix of few reports. I wouldn't say it's just a single report because it's a pretty smart way to do it. But there rather exist quite a few smart ways to sort of conceal your positions in the market. Um, the when is very critical. We might know the why, we might know what is going on. The what is usually the easiest, the why is slightly more difficult. But the when, I think, is the trickiest of it all. And to understand the when, we need to start watching the markets in a different way. We need to start understanding, based on past years of performance of these hedge funds, what kind of percentages are they looking at earning on their investments, and what kind of exposure does a particular fund have to the products that we are watching. If we have an idea of what the funds are playing in and what direction they're playing in, especially, typically we can take a position which goes the right direction. Now, that's definitely easier said than done, which means we need to be hearing what those people are talking if they do talk. But we also need to watch um, how the markets, what kind of volumes the markets have traded over this time periods. And over the next sessions and few months and years that I hope I'll be able to do this, I'll try and showcase how we can search for that information in the public domain, of course, um, but also how to maybe extract that information in some certain different ways as well. So yeah, that's where the trade speak is. And now we look at what is the points of interest, which is what we call trade appeal. The headlines of the situation are this: France has dropped plans to decrease the diesel discounts. This is for the farmers. The protests have been going on. I hope some of us are aware. The protests, however, have not stopped even after this declaration. Global stock indexes are up, while USD is down a bit on good inflation data, while oil settles at its highest in the last 8 weeks on the issues in the Red Sea. Serbia has received almost $2.25 billion in investment in renewable energy from China. Is the largest kind of its investment in the Balkans. And that shows you how close the relationships are building and how China is sort of hedging themselves in the domain of energy. Finally, more grain ships divert from the Red Sea. The issue doesn't seem to be getting resolved. In fact, freight costs are going up. So you would see that impacting inflation as well. Rice rates seem to be increasing to record highs. Indian stocks are way down and seem to be still impacted overall on the volumes. So rice prices are definitely touching highs globally. And Ukraine is to start building 4 new nuclear reactors this year. And this is a positive news because that would typically mean that instead of becoming a net importer of natural gas, which it currently is, it might in fact start exporting electricity. And that's something that we need to watch, especially being a war zone after all. And there are additional risks involved. We've seen that in the earlier stages of the war, uh, where the nuclear reactor was taken over and there was a very tight battle about it. So, how these are protected, how these are controlled, is something that the world will watch, I think, with pretty bated breath. Now, the upcoming reports this week are of important interest to us. Brazil debt to GDP for one, Germany balance of trade. It is going to determine how the EU is doing overall. And then the US Fed interest rate decision. I think that impacts almost every one of us as commodity traders. And finally, the USA unemployment numbers, which tell you how the market is doing. And I think the expectation from the market is that the inflation is going up and the unemployment numbers should actually come down. But that's something that we're going to look at bated interest, and also whether the US Fed stops raising interest or in fact goes the opposite way and drops interest points. Inflation data is eased a bit, so there's a chance of a reversal. But the market still expects the Fed to hold tight. So if they do release, the US dollar might lose its position against the currencies a little bit. So yeah, that's something to watch about. And now we move to a new section, a section that I spoke about in the previous week. And that section is what we call Contradeversy. Contradeversy is about the tales, the legends, and some of the myths in the commodities trading. Um, Many of these are unresolved. Many of these stories are have some amount of facts. Some of them are currently in litigation, so they're not unresolved presently. Some of them are, although very true, proven, um, and historical in that case. But some are definitely conjecture. So this is basically how the markets have done what they've done, and some very surprising tales of how some of the biggest companies in the world either fall into a trap or they get away doing something which probably they shouldn't have. And this week we are examining a pretty interesting case of a $590 million scam, fraud, default, counting. So this is what we call the carousel fraud. And this has recently happened, and I'm going to talk about um, how this has impacted overall global trading in the next slide. So the story starts with a few consignments of nickel. And this is a trade which has been happening since a long time. And both the companies involved majorly in this trade have been doing business with themselves for close to 7, 8 years. Um, and this goes back to a time of roughly 2015. In 2015, a trader comes out to increase a business volume with a till then smaller supplier. And that's where this entire thing sort of starts. The discussion is between Prateek Gupta, um, who runs at that point of time a business called Ushdev International, and that also becomes a new business. So that entity also then is Trafigura, and in Trafigura, a senior trader who's named Harshdeep Bhatia contacts with Mr. Gupta to increase their volumes of trading nickel to around 50,000 metric tons back in 2019. Now, as per the story goes, is that there's a WhatsApp group which is formed between the head of Trafigura's division, uh, the senior trader, and Mr. Gupta, where it is discussed that to increase these volumes, there should be a possibility of looking at trading scrap metal with nickel and other metal alloys with varying degrees of nickel content, sort of in order to meet these required trading volumes. Um, and this has in its play all of the glamour and glitz that usually goes with this. We have meetings and five-star hotels all the way from Bombay to Dubai. And it seems that typically, um, while the credit rate on nickel happens at roughly 99.8% purity or more, um, these guys figured out a way to sort of get financing by, I think, reclassifying or redeclaring um, not same quality of metal as acceptable. And then if um, such an arrangement apparently is supposed to move forward, of course, people would not need to know, except those with the need to know. Um, and Trafigura would like to buy this back. Um, Gupta's companies typically would buy the nickel alloy scrap from other metal traders, which would then be sold to Trafigura. By 2022, actually, in 3 years' time, most of these buyback transactions, um, which Trafigura did, were metal cargoes bought from the company and then sold either back to the same entities or basically to others that were nominated by these entities. And this is where um, has de facto control of multiple companies under Gupta, Spring Metal, Minecraft, New Alloys Trading, to name a few, are all these entities which would be sort of played into the trading arrangement. In September 2019, um, Singapore head of trading at Trafigura's request, UIL, these three groups are also introduced to the trading, which generally is a sign that something needs to be looked at in the trading parlance. Um, Now, last October, based on what happens, and nickel prices shot up due to Russia's invasion of Ukraine, and Trafigura, which was being financed by Citibank at the time, who does not usually finance anything less than 99.8% purity. And they came under huge pressure from to sort of ask Trafigura to reduce these trading volumes. And to reduce these trading volumes would mean canceling out those stocks and selling them off. And Gupta's companies obviously found it very, very tough to buy back these cargoes from Trafigura at those prices. That's extremely high prices. So Citi in last October cancelled its $850 million credit line to Trafigura that was being used to finance these nickel shipments as sort of this things grew and those red flags came up. So in multiple WhatsApp requests that Mr. Gupta defends this arrangement as, says that there has been requests from this trading team to produce containers with nickel inside for inspection so that this arrangement would never get exposed and to sort of placate the bank during the crunch time when Citibank um, agreed or asked cancel this financing line. Now, currently, the situation is such. Trafigura has asked for a $625 million freezing of Mr. Pratik Gupta and his companies. The defense that I mentioned in the last few minutes was Mr. Pratik's defense. And the fact is that today, either of these two companies are looking at a hit of close to that amount over and above the legal fees and all of the other quagmire that they're going to go through. And these are one of the largest trading companies in the world. And it's something that's still developing. So none of these are clear. Um, we're still finding out. The world is still finding out what is going on. But the entire thing in this is that the business house like Trafigura chose to do business with a party who didn't really have credibility in the overseas market. Um, there were red flags in the past. Governor Group, Trade Finance Fund, Transasia Private Capital, in fact, lost money in annual dealings with Mr. Gupta's companies. So there are some big question marks about this. And most people actually had stopped doing business with these people because they had a dubious reputation. So what we say in trading is that if there's something that looks too good to be true, um, there are very good chances it typically is. And this is sort of where this fraud started. It was a systematic fraud um, that has a relationship dated back to 2015. And based on a 4 year working relationships, 2015 to 2019, was what gave either of these companies involved the confidence to play in to this and sort of increase their trading positions, but without either an understanding or a control from whoever were the custodians of these goods to see how badly they would be impacted. Um, I think this takes a few more years to get solved. Um, and this is also, I think, subjected to understanding how this fraud takes place and has taken place multiple times. Same kind of thought process, and it's in the industry we call it a carousel fraud. What happens is carousel fraud is that you have a single parcel of goods, and then there are multiple entities around it, and that same uh, stock gets traded to these multiple entities overall, sort of, and then financing is taken for each of those entities, and this is pretty prevalent, by the way, in the agri commodity industry as well. So when you look at the balance sheets of a company, you don't really know of, you don't see them present in the market so much. Um, Looking at the overall entities, looking at how their balance sheets have been playing, how many interrelated transactions they have done, sort of gives you a clue on how they're playing. And if the financier on the other side, or the trade partner on the other side, banks on that balance sheet, on the overall entity, to look at this and say, well, this is a big company, and gives them those credit lines or gives them access to finance, which really doesn't have that, that's when they lose money. And a huge amount of money has gone out in the past. And I don't really think that there's any excuse for any trade house of size, Trafigura, to have fallen to the scam for scam. But this is, well, it is a controversy. Somebody saying that it was Mr. Gupta who proposed the scheme and ran it. While on the other hand, it was said that it was internal involvement as well. Um, and that's where the controversy comes from. And I think the fact that the role of the custodians has not even been talked about, the storage, the process, the audits which are supposed to be conducted on the stocks, um, the bills of lading, the quality assessments which need to be carried on for commodity companies moving out. I think a lot of these people also need to have been involved. And how big and how deep this was, and how many processes were sort of let go to have had this happen or to have this trade happening, and ultimately what the fine would be against the profitability that this trade would have run at is something that will determine the success of the participants and also the groups involved in this carousel fraud. Um, it's still to be said who's going to be penalized. But I think um, there's some impact already seen, and it typically would be that there has to be a huge impact on Trafigura itself, being the bigger entity in this trade, and would definitely hit its reputation. So always be safe. To business with credible people. And if you don't know the people that you are getting to business with, it doesn't really harm to find out the people, understand the people behind, and sort of understand what they've done in the past. So yeah, I, I hope you never fall prey to something like that, and neither do any of us. Cheers. So now we come to tradecraft and see how the performance has been over the last trades. And in the trade setups basis last week, the Cocoa USA is a continuation. It's still up 5% over last week. And I think we are now at almost USD 4,000 per lot. Put a take profit order at 47.10 or better. It did hit there last week, reversed a bit. And I think if we close it, roughly we'll make 4,000 US dollars per lot. And I think that's a pretty good trade. First trade, so yeah, winning trade always helps happiness. Finally, what's up for next week? Well, we have another session of CONTRADEversy. We're definitely going to talk about risk management, which we couldn't this week. And then I think there's some pretty sizable trades happening next week. And I think the trade setups are coming in. And if they are proven positive, as per my strategies and models, I think we get some nice setups to trade in the coming week. Finally, thank you for all of you for coming in. We come to you from all of these nations and continents. Hope you enjoyed this session. And I'm always available at the Trade Stylist. And hopefully, next episode is on the 3rd of February. I hope to add some more value to your weekends and hope to see you all there. Cheers and have a good week ahead.